Hi, good evening, everyone. Thank you for joining. So we're just going to give it another minute for whoever can join to join right now, and then we'll get started. Okay, because it's I know it's 5 o'clock in the evening, so I'm just gonna go ahead and get started. Of course, for people who keep on joining, you will get this presentation and these slides through your email. So of course, if even if you miss out some part of our webinar today, you will get access to it. So, good evening, everyone. My name is Anam Umar, and I am co-founder and director of business development at Headway Capital. And the topic of our webinar today is real estate investing for physicians. I've been doing monthly webinars for education purposes only. I myself am a gastroenterologist, so I do understand the concerns that physicians may have in matters of different investment strategies and how to deploy and wisely invest their income. So I love talking about it. I love educating other people, and I'm glad you're all here. So welcome to the new people who are joining. Thank you for taking our time to join us today, and of course. I do see some old some people here who've been repeatedly coming in. So thank you for continuing to take our time for us as well. This is a number for you all if you want slides. If you want slides, please text me. The number is 281-559-7061. Essentially, you can reach out to us for any questions, any concerns. At the end of this presentation, if you do have questions, please reach out to us through this number as well. Going over disclaimer, this webinar is for education purposes only. This is really important. It should not be used as a legal, accounting, or investment advice. The information in this webinar does not represent an offer to sell or solicitation of an offer to purchase an investment. You should consult your own attorney, financial advisor, and CPA for any legal matters, investment, or any specific tax-related questions. A little bit about Headway Capital. So Headway Capital was founded by my husband, Sid Shamim, who's the founder and CEO, and myself back in 2017. The purpose of Headway Capital was pretty much to, build a platform where we could, start our own investment journey. Essentially, it was to build and protect our own wealth. And of course, along the way, we found a lot of investors who have invested, who will continue to invest with us. So, of course, this is a platform to protect the wealth for busy professionals. Our mission is to offer investment opportunities that provide cash flow, that provide equity appreciation, that provide tax benefits, and we'll go over all of them in a little bit. And our goal, myself and yours, should be to achieve financial independence early, so that you're not dependent on your job to retire if you wish to retire or not. I think our goal is early financial independence. Our team has extensive experience. So these 4 members here are our core team, but we have a bunch of people who are working behind the stage who have been running the show essentially. So our team has extensive experience in sourcing, vetting, and investing in alternative investment opportunities through multiple cycles. So we've been doing this repeatedly over years. And we would like to share our experience with you, and also have you enjoy the benefits and reap the benefits with us as well. Introducing all of us. So our team involves, of course, Sid Shamim, who is the founder and CEO of Headway Capital. I think you must have heard a couple of his webinars for, of course, people who know him, and I do see some of our active investors here as well. So of course he is the man behind it all. So if you have any specific questions relating to any current existing portfolio or any or our Headway Capital's vision, he may be the right person to reach out to. And of course, all of us are pretty involved as well. I am a co-founder and director of business development at Headway Capital. Essentially, I'm a full-time gastroenterologist as well, and I think I've learned, I didn't have much of any financial knowledge like most of you, most of healthcare professionals. I pretty much was not good at investment. I don't want to use a different word for it, but I think over the last decade, I've learned a lot. I've learned a lot through active experience of doing it, through visiting, attending a lot of similar educational streams like webinars, conferences like yourself, and I'm glad all of you are here. Yeah, and just doing this, and I think I would love to share my knowledge with you, and these webinar series are dedicated towards that as well. Brian Alfaro is Director of Investor Relations now. Similar to us, so we actually, before we founded Headway Capital, my husband and I, we had a huge portfolio of single family uh, houses. So, that's that's how a lot of people start off, single family units. You want to do it all. You want to do it yourself. You're like, okay, I have extra money. Why don't I just buy a management property ourselves? And that's what Brian was doing as well. So before Headway Capital, he, long couple of years before Headway Capital, he also was owning and managing single family properties before he realized that this is not the way to go. And for us as well, we weren't building our net worth at the momentum that we had envisioned for ourselves. And that's how, we came up with Headway Capital, and eventually Brian joined us, and he's the Director of Investor Relations. He has a wealth of knowledge. Of course, a lot of our new investors have their first introductory call with him. He can answer any and all questions that you may have in regards to investing with Headway Capital or just in general. He is definitely a very, very good resource. And Omar Nakri is Chief Financial Investment Officer. He is the point of contact for people who are our existing current investors. He's the one who sends you your bi-weekly and monthly professionals, your K1, so on and so forth. So he is usually the point of contact for people who are our current investors. Headway Capital's core value, first and foremost, is transparency. We whatever we do, we have established investors that continue to invest with us, and for a reason. They have trust in us, we have trust in them, and we have a relationship that works. We are committed to being very honest. We are very lean with our operations. We try to maximize benefits for you. And I think the good thing about Headway Capital, which may or may not be different with other investment companies, would be that we are personally invested into Headway Capital. So it's not that we are getting other investors and making money out of their money. Usually, as co-founders, we are every opportunity that we look out for, the purpose behind it is of course another investment opportunity, but also a place to invest our own money into it as well. So we are usually one of the major investors in all of our deals. So if we, because we're personally involved, we're completely integrated through the process. We make sure that we maximize returns for you and for ourselves as well. We have accountability. We take responsibility for our actions and our investment strategy as well. We always put investors first. Our mission is to meet our investors' goals and objectives first. We always make sure that we give our investors their returns before we take our share. So that is a policy of Headway Capital. That is how we've always functioned, and we're very proud of our strategy. That's what works for us, and that's what helps us keep your trust as well. So this is our current portfolio. Headway Capital has over 440 million assets under management, about 440 million worth of assets under management, about over 2,800 units under management. We just recently acquired another 300 unit property, so that has to be corrected. But but definitely we're growing. We're growing every month. And Headway Capital has had we almost or we have a projected return of about 25 to 30% average annual return at the end of final sale of a long-term investment. So this is not your preferred return. Our preferred return is about 8 to 10% or maybe more, depending on what kind of investment opportunity that is. But this 25 to 30% is for long-term holds, for 3-year, 5-year investment opportunity. That is the kind of money you would expect per year at the end of final sale. We have over 500 active investors and who continue to invest with us. And of course, we're from that perspective too, we're growing every day. These are a couple of testimonials. You can always refer back to them. But we're Headway Capital is very, very proud of its operations. We have very, very happy investors as well as vendors who continue to work with us. So just you know I think it keeps us going, and we really enjoy them having confidence in us. So starting off our webinar today. So our webinar today is about real estate investing for physicians. How should you start off? What you should be thinking of, and how do you make your decisions? Number one, why real estate? So I guess it's almost obvious. We've seen so much market volatility. Real estate is essentially an investment opportunity that is not volatile. It's a tangible source of income. It's a tangible investment that you can touch, you can feel, and it slowly but only appreciates. It's not that, it's not like stocks that, overnight you can lose hundreds of thousands of dollars. Real estate doesn't work like that. And as a physician myself, I think I echo with other physicians when they say that we are trained, or we spend our entire career being very risk averse. And I think from that perspective too, investing into other volatile investment opportunities really is very, very stressful for myself too, and would be for you as well. So real estate definitely is not a volatile source of income. Number two, it provides with inflation. Real estate only appreciates with inflation. So if you're investing, for instance, in a real estate asset, it's only gonna get more. The asset is only gonna appreciate when with inflation. Rents increase with inflation, and your cash flow increases. So it's definitely a sort of an investment opportunity where inflation actually benefits your return. You get tax advantages. Now, I have done some educational series regarding tax advantages from real estate investing as well. But these tax advantages is very, very personal, very specific to your how you and your partner would work. So I think regarding tax advantages of real estate, that is something that you would definitely refer to your own CPA to discuss that. But real estate definitely provides tax advantages because passive income, which is earned, is taxed differently from your W-2 income as well. And there are other tax advantages through depreciation from real estate, so on and so forth. And then, you can do a 1031 exchange to defer your taxes. We can talk about it, and we will talk about it a little bit. Real estate allows you to preserve your wealth. As I said, it protects against inflation and stock market volatility, and it allows you to have work-life balance. It's not something that, you kind of invest into a platform and you're constantly watching or constantly following it, constantly selling and buying stocks, constantly losing your sleep over it, talking to multiple people, getting different strategies. Real estate doesn't work like that. You find a good asset, or you find good people to work with, and then you invest and park your money over there and let it kind of grow and see how it does. And you reap the benefits, you get your cash flow. And there's very less active involvement, very less of your time is occupied trying to make your investment work. Now you may be thinking, I'll buy some rentals and invest myself. Of course you can, but it is very, very time consuming. It depends on what you're doing. Of course, if you have a partner who may not be doing a full-time job or may not be working. That could be something that you could share responsibility with and have and manage your own, get your own rental, single family rental properties, manage your own homes. But as a physician, it may get very, very difficult for you to do so. I think we're always kind of trying to catch time or find more time to do things. And I think from a work-life balance perspective too, I think physicians do not have a lot of work-life balance. And when you try to introduce another full-time, like this real estate, managing rental portfolios is almost a full-time job. And when you add it to your work, it can be very, very exhausting and it can definitely burn you out. So if you want to kind of buy your own rental home, you must find a home. You must work with realtors. You must work with title companies, lenders, etc., all on you. With the property management, they even if you hire property management, for instance, I know some people who have a 30 single family portfolio. They've hired a property management. Still, that property management is going to come to you with big questions, with issues pertaining to their investment. Even if there is a manager, the manager will ultimately call you if something goes downhill or goes wrong. There's a low return of investment. An average single family home probably makes about 2 or 300. Some, of course, if you'd bought that single family home at a very low mortgage or fixed mortgage many, many years ago, and now it's, that area has surprisingly appreciated quite a lot, and then you make maybe $800 or $900 a month on the rental property. Usually they don't make that much money. So I think from if you compare the amount of effort that you put in versus the amount of return that you get, that may not be a lot. And I think that was the drive force for us as well. Like we did have quite a significant single family portfolio before we went to multifamily because it was just not making sense for us for the amount of time we were putting. And values are capped. Your rental homes values are based on comps. So your equity creation is limited. No matter how much you may renovate that house, if it's a single family home, it can only appreciate that much. So it's definitely something to keep in mind. Now you really have to ask yourself, do I really have the time and desire to manage a portfolio for a rental house? And the answer usually is no. The other aspect of it is that you may not know how to do it, right? It may be a learning curve. And, I think a lot of people spend a lot of, or waste a lot of years just trying to figure out the right strategy or gain enough knowledge to do it themselves. And because this is not their full-time job, and you have a very, very demanding full-time job, being a healthcare professional, um, you are a physician, having a full-time job plus your family's commitments, it gets, I mean, you spend a lot of years. I know of physicians who I frequently meet who've spent many, many years just thinking about it, just thinking about where do I start from? How do I have enough knowledge or have the confidence to do this myself? And those are all years wasted. That is all years of money that's kind of sitting in your bank account and being exposed to inflation. So you have to think about all those things. That do you have that time and do you have that desire to do it? And do you have that courage to take that kind of, um, not just a risk, but that courage to take up that project, which can cost you a lot if it goes down. I think being a passive investor, as a busy healthcare professional, may be the way to go. Um, the way a passive investor works is that there is a lot of work. There may be some amount of work that is involved before when you decide to invest into a project. So when you invest into a project, you of course have to pick an asset class that works for you. It may, for instance, a multifamily class. You have to define your goals. Now, your goals are your goals that you want cash flow, because if you have something in mind that 2 or 3 years down, I'm going to invest into or open an outpatient surgical center or invest into it. And my goal is that I need cash flow over the next 2, 3 years. And that may be your goal. Or is your goal reducing your taxes, so on and so forth? You have to define your goals. What are your goals? You have to have that in mind. you have to have liquidity to invest. So of course, a minimum investment usually for investment opportunities is about 50 to 100,000 is depending on the what kind of investment opportunity it is. You have to find an operating partner. I mean, an operating partner, for instance, would be Headway Capital, in which they are the ones who vet all the deals for you, make sure that everything is in place, and manage the asset as well. So I think finding an operating partner who you trust is probably your biggest job. It's more important than the asset. It's more important than anything, because no matter how much you would vet an asset, if the operating partner is not experienced, it may not work well either way. You have to be a sophisticated and or an A-credit investor. So there's a requirement for you to be an A-credit investor to invest in most passive income opportunities. And most of you, for a passive investor, you have to be an A-credit investor. And it's really important for you to be able to analyze deals and to invest, to know to be able to differentiate between different options. So if you have two investment opportunities, you have to be able to read numbers, like which investment opportunity has higher cash on cash, which essentially means that if you invest, for instance, 500,000, $50,000 a year, and your return is $10,000 a year on that $50,000, your cash on cash is 20%, versus another investment opportunity where you're investing $100,000, but your return is still the same. It's $10,000, but your cash on cash is 10% over there. You want to invest in a deal that has higher cash on cash value. So I think that sort of ability to analyze deals in that way is really important in this journey. What passive income really means in real estate? So passive income is getting income by doing minimal effort. So it basically includes rental income, it includes dividends or interests that are paid, that you gain as well from investing. Different examples of passive real estate income streams would be hard money lending or multifamily investments, which is syndication. So hard money lending would essentially be that you find yourself or a group of people who instead of lend money to lends loans, essentially, rather than involving a bank. You define your own terms. You decide that, okay, I'm going to give this person needs a loan to buy a house. I'm going to give him this much loan. However, I'm going to charge him an interest of 8% or 10%, or he needs to pay me back that loan in 5 years instead of 20 years, so on and so forth. So you set up your own terms. I think the benefit of hard money lending is, of course, the returns can be higher. Plus, you can set up your own terms. It depends on what kind of deal you get. If you negotiate it right, you may not lose money either way if you negotiate it and get the first lien on the property in case your whoever you're lending the loan to is not able to make the payments back. The other option is multifamily investments, which is syndication, which is also what Headway Capital does, in which we are the operating partner and we get a group of investors. We find an asset that works, the numbers work, the location works, the tenant population works, the cash and cash return works, and then we acquire that property and then reap benefits out of it from improving the operations of the property, from renovating it, from upscaling it, making more units, or creating more unit opportunities, or creating different investment opportunities, or essentially just raising rents from upscaling the property in different ways. What is the difference between active and passive investor? An active investor requires regular effort and involvement. An active investor would be if you bought a house yourself and put it on rent and you were the one who was managing it, you would be an active investor essentially, because you're personally involved. If your tenant has any issue, a roof leak, so on and so forth, you're the one who's fixing it. A passive investor would be an investor who puts in minimal effort. In the beginning, you of course make sure that the deal works for you, but once you've invested your money, you're just looking at bi-weekly or monthly financials and making sure that that everything makes sense and you're getting your required return. The role of a physician as a passive investor, how it can benefit you, it will buy you a lot of time. You ultimately would be making the same amount of money, but you would be able to focus on your job, your practice, and focus on your self instead of spending a lot of time, figuring out, different problems with your investor. Due diligence and trust is really important. It's important to perform initial due diligence to find the right operating partner. It's important to monitor it, to stay informed, to request regular financials, to be able to look through them, make sure that everything makes sense, to be able to analyze it, and to, of course, participate. If there's something that you feel needs to be changed, you should be able to participate that. And that is if you're willing, otherwise you don't have to. And of course you can use real estate as a diversification strategy. You can use passive investments to diversify your portfolio. Um, uh, Further on the benefits of a passive investor, it's hands-off investment approach. So you're not dealing with your tenants, you're just reviewing your monthly reports. There is a potential for steady cash flow. So, for instance, you've invested $50,000, you're getting $10,000 cash flow per year, and instead of that money being exposed to inflation, you are getting that cash flow. And at the end of the final sale of your long-term investment, of course, the cash flow is quite remarkable. Um, it allows you to have it's a diversification tool. So instead of putting all your money into stocks, putting all your money into putting all your money into different uh, putting all your money into cryptocurrency, for instance, which is can be exposed to market volatility. It allows you to diversify your money, so all your eggs are not in one basket, and it gives you a lot of tax advantages as well. The depreciation of a property is shared amongst passive investors. So I think I'm going to focus a little bit on depreciation here because I get a lot of tax related questions. So tax advantages are essentially that if when you buy an asset, according to IRS rules, every asset depreciates over time. And from that depreciation, you can minimize or reduce your taxes. Now, there is a fixed depreciation in which a property depreciates a certain amount. Now, that doesn't mean that your property is actually depreciation, actually depreciating. It just means that on paper, things are getting old, and because of that, you can get more tax benefits out of it. So because of depreciation, you can continue to claim higher lower your tax bracket and claim higher tax returns as well. And Headway Capital, if you invest with us, we will provide you your yearly K1 tax documents to help you get that advantage as well. There is why is multifamily an ideal investment opportunity for physicians? There is a strong cash flow potential. Multifamily properties provide consistent rental income. You can easily upscale your investments by adding more units to your property. You can upscale your investment by building a pool. You can upscale your investment by building a dog park. You can upscale your investment by having reserved parking and charging for parking, or by having in-unit laundry and dryer machines, by which you can increase your taxes, by changing your countertops, by changing the flooring. All of this really matters, and all of this really matters to your tenants. So a lot of times, tenants are definitely willing to pay a higher rent to live in the same area if the property, the asset looks good and has more to offer. And there is resilience in economic downturns. So as we talked about, essential housing needs kind of stay consistent, people will always need a home to live. So this is not a sort of an investment opportunity that's just gonna sort of diminish over time. So and also, as I said, that with inflation, the real estate appreciates with inflation as well. And it also allows an alignment with your physician lifestyle. Passive multifamily investments align with busy physician's lifestyle because you're not, as I said, not spending a lot of time managing the portfolio. Passive investing is a long-term strategy. You have to be patient. There is patience it's really important, because once you invest your money into an asset, you just have to really give it time for it to respond and see how things go over the next few years. But definitely, if you have vetted an investment properly, you will get your required tax returns over years. It is this, however, slower process, not like stocks that you see constant fluctuations every day. It is relatively a slower process, but the gains are quite substantial. Success requires consistent monitoring and adjustments. So we at Headway Capital, we are constantly working on making our operations more efficient, for making sure that our returns are higher, for introducing new strategies to getting improving cash flow. So that is something that we are constantly doing, and as investors, you should be constantly monitoring that as well. Um, there is for long-term success, it's really important for you to stay updated on market trends and best practices, and you should definitely engage in ongoing education and networking. Um, Webinars like these that you're attending are really good ways to gain more knowledge. Other ways of getting knowledge would be attending conferences, and also I think it really helps, like, if you are an active investor, like some of you are, even attending property tours that Headway Capital has every 2 to 3 weeks, you can attend a property tour, talk to us, and get a lot of knowledge from that perspective of how the investment strategy is doing, and what are different opportunities that you would have for future investment opportunities. Uh, you can buy through real estate investment. Once you get your return, you can do your 1031 exchange, which essentially means that if you have a real estate, you get a return. We sell an asset, for instance, or we sell the capital sells one of an assets, and you are an active investor, and you get a significant amount of money back. You can do a 1031 exchange and reinvest that money into a different asset. That way, you don't have to pay taxes on that. It's basically tax deferred, and a bigger sum of your money keeps growing and keeps giving you more return that way. And you can build a diversified portfolio. You can spread your investments across different asset classes and markets, and that reduces the risk with maximizing it. So, how to start your investment journey? The next step for physicians who are interested in real estate is to get a financial assessment. You first and foremost have to get an assessment to see if this is for you. You can consult your CPA and see if real estate investment strategies are appropriate, are for you. But definitely always look into diversification and different investment opportunities. And I think the final answer for this question is real estate is for everyone. You should attend education, get research, read books, and have some basic knowledge regarding how to analyze an investment opportunity. You should find a private sponsor or an operator like Headway Capital, and people you should find as I said, the most important part of this journey is finding, if you are a passive investor, is to find an operator that you really trust, that you think is good at what he does. He has experience and can figure out and manage your asset really well. Once you have all that boiled down, you should, if you think that you would like to invest with Hedvig Capital, you should complete an application. I will give you the link to get you through to the application, and after that, you schedule a discovery and qualification call. During the discovery and qualification call, we will discuss your goals to see if we're appropriate operators for you and if you are equally appropriate investors for us. And if we are able to provide what you're looking for, you can, through the discovery call, of course, you can review our track record, our experience, get your questions answered, and kind of go from there. I do advise everyone to that you should move quickly when deals are open for investment. Like a lot of our newer investors have this, they sometimes feel disheartened because they weren't able to reach or be able to invest, and they've been following us for a very, very long time, but haven't been able to invest with us. That is because whenever a deal opens up, usually active or our current investors who have worked with us and who do trust us and who know how we work, and also who themselves know how to analyze an asset. Once they think that an asset is as good as we think it is, they invest right away. So these investment opportunities fill up really fast. It's only a matter of days before we're full, and we're and that leaves little opportunity for newer investors who have little experience and are more scared to um, to um, to be able to invest with us as well. So I think just preparing yourself in advance, just making sure that you're ready to invest when an opportunity opens up is going to be really helpful. For a final statement, if you are interested in investing with Hedvig Capital, you should join our Private Investors Club. As I said, that when an investment opportunity opens up, you only people who are part of our Private Investors Club are notified regarding that investment opportunity first. And mostly, all the slots are filled up because people take up those slots right away. So if you want to get onto that, our private investor club list, please sign up, the application and get on a qualification call with Brian or myself. And through after that, we can definitely add you to our private investor club. By joining the club, you will have access to multiple things, including member-only in-person events. We have in-person portfolio, like property tours, where you can visit our existing portfolios, properties with us, and see how Hedvig Capital works, touch, feel, or even visit your investment if you have invested with us before, and see how the operations are working. There are member-only in-person events that we conduct, in which we basically spend some time educating, discussing Hedvig Capital's vision for future, and enjoy just knowing you. Just sitting down, having dinner with you, and just knowing more about you. We have found a lot of friends through our investors as well, and we continue to look for more. You have access to online real estate educational webinars, and you have access to exclusive passive investment opportunities as well. The requirements are an application, as I said, must be submitted. You must complete the qualification call, and you must be an accredited or a sophisticated investor. A sophisticated investor has the financial needs and understands the risks involved, and has done his own due diligence in advance. And an accredited investor has at least 1 million of net worth, not including your primary residence, or 200,000 individual, or 300,000 combined income with if you're married. This is our link to our private investor club if you would like to scan this QR code. And of course, we will email these slides to you so you can scan this QR code later as well. You can get If you want to scan the QR code that's here, if you want slides for this presentation, you can get it through 281-559-7061. And thank you so much for taking our time this evening to listen to me. If you have any questions or concerns, you can always send them to us, and we'd be happy to answer them for you. Take care of yourself.